Hi everyone, welcome to another episode of Weekly Digest by Fibonacci X. Today I have my colleagues Aanchal and Vatsal with me. If you don't know, Aanchal is part of our communication team and Vatsal is an investment analyst with us. And both of them work throughout the week to gather the details of interesting deals in the VC ecosystem in India, and then we discuss some of the trends emerging out of those deals. So let's begin. Vatsal, do you want to share which company, which deal are we talking about first?
So I'll just give a overview. So in the past week, 21 startups raised funding in India. Four of them being in the growth stage, which is from Series B to pre-IPO stage, and the remaining 17 deals were in the early stage, which is before Series B funding. So let's start with the growth stage startups. So as we previously discussed, four startups raised in the growth stage companies, which are Stage, Pilgrim, and Servify.
So Pilgrim is into personal care products, personal care and beauty segment, I think. They are a D2C player. Revenues around, if I'm not wrong, around 200 CR. And they have raised 200 CR at 3,000 crore pre-money valuation, right? So for me, the playbook for similar companies has already been set. You know, a lot of companies, few companies even going for IPO already in this segment, right? Mamaearth is one example which has been listed. It will be interesting because now they have, I think, 10 outlets run by the company, and the main focus of this fundraise was to sort of expand in the offline distribution, right? So now I think the business will become operationally heavy. So it will be interesting to watch, how do they expand, what areas, what geographies, and that's how we get to know, right? How was their journey to IPO going to be? They will probably do another, round leading up to the IPO. I'm assuming that because they will need a lot more liquidity to do that, right? It's again a personal care product. The gross margins are good, but operational efficiencies are important when you move to offline distribution, right? Now, for founders building in this D2C segment, whether to stay online or also go offline, I would say you should think of your business in three phases. In the first phase, you focus on online and one channel, right? Don't spread yourself thin. Don't get scattered, right? So focus on one channel, which is going to be your niche, probably up to let's say a few CR, and beyond few CR till 50 CR, you go everywhere online. And I think after that, you start thinking about offline. Uh, it depends on the things which you're selling as well, right? For some brands, it may make sense to go, let's say, right after 10 CR to go offline. For some other segments in which, let's say, we have few companies in jewelry segment, right? D2C jewelry, their trust is important, right? So you may actually start with an offline store very early, even before you touch 1 CR, because nobody is going to buy a 40, 50,000 rupees jewelry online, right? Even if some people buy, you are not going to have a large addressable market. So again, D2C personal product, some segments it makes sense, but largely I would say 1 to 10 CR, 10 to 50 CR, and 50 CR and beyond a different phase for the company, right? So that's how founders should think about it. But I would say in personal care, even in tier two, tier three markets, I see a demand. So it will be interesting where do they choose to open those stores beyond these 10 stores. Yeah. Anything you guys want to add?
So in Pilgrim, there are main differentiation, like you said, differentiation in D2C market. It's very important because there are so many brands in the same category. There are competitors like Mamaearth, Wow Skin, Nab Habit. They also doing the same thing. They providing the toxic free products, vegan, paraben free. But what Pilgrim claim, their main differentiation is their ingredient and one of their product, hair serum. It went viral, and I think that product create a very good hype among the audience. Like it's a very good product for the hairs. And one of the main thing also in their marketing strategy, how they partner with the influencers. So they collaborate with micro influencers, and I think that strategy really helps from them.
Got it. No, that's helpful. Like you said, differentiation is very important. Um, Even differentiation, if you have a clear differentiation, it helps you in building your story for consumers very early on, right? So there is that magnet in the idea, it sticks, right? Um, and usually that's the challenge, right? Unless you have the differentiation, that secret sauce in B2C businesses, it's very difficult to survive and have favorable unit economics because you're not able to charge premium and then consumers just buy whatever is the cheapest, right? So it's very difficult, right, in that case. Yeah, let's move ahead.
Talking about is Stage. So Stage is an OTT platform which is bringing forward TV shows and serials and movies in regional languages. They are currently only operating in Bhojpuri, Rajasthani, and Haryanvi. And based on these three languages, they already have a 20 million base with approximately 4.5 million people who are paid subscribers.
Okay. And how much did they raise? At what valuation? What is the utilization of funds?
So they raised approximately 87 crores from Goodwater Capital, Bloom Ventures, and more. Valuation is not like they did not disclose the valuation at which they raised funds, but the funds will be utilized to onboard more series and shows as well as go for more dialects and languages.
Got it. And so this regional trend, right? The content which they are creating in regional languages, right? Now, this is what we see across different businesses that the demand is coming from areas outside tier one cities. And this is also one of the themes on which Fibonacci X focuses, right? This is the Middle India or the emerging consumer group or Bharat, whatever you want to call it, right? But consumption and digital penetration is going to grow this market multifold, right? As we already know, the smartphone penetration has actually is actually healthier in most of the hinterland areas now. So I think we'll see more such businesses getting funded, which are building for a niche, regional niche, a cultural niche, and probably going to expand from there.
So adding on to your point, so differentiation will be a challenge for these companies because there are other brands as well. So for example, Stage generated a revenue of 3 CR in FY23. But there are also other companies like Chopal who generated a revenue of 24 CR and are offering the same shows, movies, and videos uh, in only Haryanvi and Bhojpuri. So creating a differentiation which is available to the people, I think that would be one of the most important pointers for these brands.
Let's move to the next one.
So the next startup that we'll be talking about is Servify. So Servify is a platform where customers can add their household electronic gadgets onto the platform, store the bills, and then access authentic brand authorized service during and post the warranty period. They raised approximately 66 crores from B Next Capital Singular Growth Opportunity Fund with a post-money valuation of approximately 5,800 crores. They also generated a revenue of 750 crores in FY24, showing a growth of approximately 24% and a decline in net loss by 60%.
Yeah, so see, this is how people should think about finding gaps and white spaces. So Servify, you can think of it as an enterprise platform. So once you purchase a digital device, you can enroll, and then you can access, where to get it serviced, you can track it, etc., etc. So I think they have already tied up with major brands like Apple, Samsung, OnePlus, and other brands. And what was the insight which founder had? Srivats Prabhakar is his name. He's the founder and CEO of Servify. Um, and I was just reading about what he said, in the earlier years. So his simple philosophy was that a customer isn't just someone who is going to buy your product. It is also someone who has already bought your product. And that's the promise which he wanted to make, right? And this is his, I think, second venture. And what was his insight was that he figured out that while most consumer electronic brands were obsessed with selling directly to the consumer in the first place, uh, often through innovative ways, but not much was done in the after sales service. After you've sold a device, there was not much done, right? And some of the use cases, for example, I was just reading like what could be the use case is that um, let's say you're a traveler and you have an iPhone and you drop it. You can walk into the service center, global service centers, because Apple is using this platform, and you could get your device replaced, right? And I think one of the biggest validations, if I look at it as an analyst, is that he was able to penetrate the Apple ecosystem, which is not the easiest thing to do. As you know, Apple as a company is very particular about when they think about partnering with brands outside Apple ecosystem, right? So that's the validation. Um, I think they will go for IPO, and they have already given the mandate probably for the IPO. They are already preparing for that. Um, so one insight was about how to think about market gaps and how to think about big ideas. So he identified that the smartphone market is going to grow, but companies are not paying attention to after sales. So that was one insight. Second, I was happy to see, in this round also, I think that it's a combination of primary and secondary transaction. And there will be some buyback of ESOPs from employees. So it will bring some liquidity to early employees. And that's the beauty of startups, right? That startups are great levelers in that sense. So a lot of people are going to become probably millionaires right after this round is closed because their ESOPs are going to be sort of bought back and the liquidity will come to them, right? So in that way, startups are amazing. The ones which work out is that you have so many people who get paid for the hard work. The company started in 2015, 16, so you can imagine it's a 8 to 9 year journey. So that's great, and I think that gives more confidence to the whole ecosystem when something like this happens, where the company is closing pre-IPO round and early employees are getting rewarded and they are getting ready for the IPO, right? So I like the idea. I think the business model is also good. I think IPO will be a success. I think they are planning for a valuation between 1 to 1.5 billion. So it's the new unicorn. We'll have one more unicorn right after that's closed. So currently there are, I think, 81, 82 unicorns. We are also launching a report later this week, which has sort of tracks that for last 2 3 years, how many unicorns are there, how many are staying in that bracket, etc., etc. So overall, a big plus for the overall ecosystem, and I think the job well done in terms of identifying the market gap, right? So I mean, I'm impressed. I don't know what you guys think about it. Yeah.
I agree with you, like how they identified. So, for context, the founder also was the founder of another brand prior to founding Servify, which was called the Service Solutions. So, I think he had identified the gap that post purchase and post warranty services is a growing market where people are going to unauthorized stores or stores which have not partnered with official companies. So I think he identified that gap properly and then executed it into partnering up with brands so that they get a legitimate sourcing of the servicing that the product requires.
Yep.
So let's move on to the early stage startups. So like I previously mentioned, 17 startups has have raised in this early stage, with the total fundraising coming around to 420 crores. So let's start with Go Zero. So Go Zero offers low calorie, high protein vegan ice creams with 100% sugar free products using plant based sweeteners. So one thing about Go Zero was that even though they are not using any added sugar in their products, but they are using product ingredients like stevia, melatonin to sweeten their products. Although stevia is one of those products which does not increase your GI value, but melatonin is one of those ingredients which does increase it but it is lower in comparison to using refined sugar, jaggery, or any other type of sweetener that you use. So they have raised around 30 CR from DSG Consumer Partners, Sama Partners, and V3 Ventures. In FY24, they generated a revenue of approximately 11.5 crores. And in January 2025, which despite being an off season for ice cream, they recorded their highest sales, crossing around 5 crores in January alone.
Yeah, so that's the beauty of digital channels, right? Your brand can spike if there is a marketing hype, etc. I weren't they on Shark Tank, right? They went to
Yes.
Shark Tank, right? And I think Aman is also backing them along with Dharmpal Satyapal and all these guys, right? So yeah, I think it's a good story. So see, there are two sides. One is their 100 ml is priced at 99, so it's very pocket friendly. I think it will fly on Blinkit. And I've seen, even I have ordered after hearing about the hype on social media. So I ordered for my wife and we tried a couple of flavors. So I think that product will move, especially during the summer months. Uh, my other side is that what you mentioned earlier, right, when you were introducing that what they are doing to replace sugar. So because the hype is there, now people are going to tear it down in terms of the health aspect, right? Health as a category we know, has been sort of very active in the post-COVID world, especially online channels including Amazon, Blinkit, Instamart, Flipkart. Anything healthy has just sells if you're able to position it well. Um, so a lot of questions are going to come now on what are they adding in terms of ingredients, because at least the what we call the health conscious individuals in our lingo, they are going to sort of get into those details, right? Uh, and Dharapal Satyapal, great banker, a lot of knowledge transfer will also happen. So they already have a strategic investor on place. So I don't have any doubt in terms of their distribution, etc., because that will be fixed through them. But we have also spent a lot of time on health snacking last year, right? We even have a couple of companies which startups which we are currently accelerating as part of our program. So why don't you share some high-level numbers about health snacking in India, how that's emerging? Um, the overall F&B market is around 3.8 lakh crores. Within that, health F&B is including, everything, juices, snacks, etc., is 16,000 crores, and a subset of that is health snacking, right? So we are saying this market is going to grow 2x, while the overall packaged F&B is going to grow 1.5x. Obviously, the numbers, right? Because we are starting from a smaller base, so the growth will be higher. But the overall market will still go from 4 lakh crores to 6 lakh crores, right? So this is a huge opportunity. A lot of brands will emerge, and I think the legacy players also, which are already big, let's say your Haldiram and other players in the snacking market, also have got a wind of this trend, right? So they also are launching a lot of new products around health snacking, health F&B. So this awareness, right? And the awareness coming from the rise of non-communicable diseases and lifestyle diseases in urban areas, and even now spreading to smaller cities, towns, rural areas, right? So a lot of people are becoming conscious of what they are putting into their bodies. Um, anything, Vatsal, anything you want to add?
So adding on to your point that legacy players are also entering into the market. So as you mentioned, Haldiram. So Haldiram has already launched its healthy whole food based snacks called Whole Foods. So the name of the brand is Whole Foods, as well as legacy companies are acquiring new age brands which are into healthy snacking. For example, like ITC acquired Yoga Bar, Marico invested in True Elements. So legacy players are already trying to penetrate the healthy snacking market and the healthy F&B market.
Yeah. But our Fibonacci X house views that this category will grow. So new brands should attempt this market, and probably having a niche, whether it's fresh juice or fresh food or protein bars, you should have a niche where you want to build. If you don't have a niche, I think it's sort of difficult to position and convey or amplify your message to the consumer. Okay, let's move to the next one.
So the next startup that we'll be talking about is Slick. So Slick is a quick commerce platform which is offering apparel and accessories in under 60 minutes. Right now, they are only operating in Bangalore, and they feature brands like Snitch, Soul Store, Bewakoof, and more, with a total of around 80 brands on their platform. They raised approximately 27 CR from Lightspeed Ventures, Multiply Ventures, and some angel investors like Abhishek Goyal. The revenue that they have generated is not available, but I think they are planning to enter tier 2 and tier 3 cities and covering approximately 70 to 80% of Bangalore in by utilizing the funds that they have raised.
Yeah, I think overall, quick commerce, there has been significant growth. Uh, and what is interesting about Slick is that they want to expand to tier 1, tier 2 cities. They want to do try and buy, instant refund, seamless shopping. So, uh, and they are tying up with, let's say, 80 plus brands, etc. So let's see. I mean, they are still in, single city, and even Bangalore, they're not covering all the pin codes. So let's see. See, I was also thinking about, let me share my screen. I was also thinking about what are the psychological drivers of quick commerce. Can you guys see my screen? Yes.
Yes.
So I came across this research paper which just came out this month. It's by Rishika Arora, who's a student at University of Delhi. So I'm just looking for any recent research on the India market. It came out in March 25, published in a journal. I'll have to check the credentials of this journal. But anyways, I found some of the findings to be interesting. So just coming down to the basic drivers of quick commerce, right, in India. And see, you have to understand that quick commerce, because your margins are under pressure, you can only do it at scale. So India is the only market where the playbook is going to be built, right? Other markets, the economies may not make sense. So I was looking at what are the age groups, right? So 18 to 24 is the 65% of quick commerce orders are coming from this age group, right? So what we call Gen Z for us, right? So Gen Z is driving that. So this is one. Second is the gender, it's split 50-50 between male and female. There's no differentiation. Location, it's currently 100% urban because the survey was probably done in the urban area, right? If I look at here in terms of profession, I think roughly 50%, 45% are students, 25% are professionals like us, 12% are self-employed, other is very less, right? So still here, young professionals and college going students are driving that pattern. Or it could also be the case that the younger person of the house is actually placing the order, right? It doesn't mean that he is consuming everything, but people in the household, the way Indian households are built, will generally ask the younger one, right? You know, Vatsal, why don't you order this from Blinkit or whatever, right? So that may be the reason. They may not be consuming all the things. So they are the buyer, but they may not be the consumer, right? Here. How often people use quick commerce? So few times a week, which is a very healthy trend. 48% are saying few times a week. 23% are saying daily. So that's also another trend. Now here, which categories currently? It's groceries and food delivery, and then comes something like Bolt is becoming popular. And I also noticed some products like soups, etc., now are going to Bolt by default, right? It's not that I have to choose Bolt. So if I go to a particular restaurant on, let's say, Swiggy, some products will just come in, some things will come in 10 minutes, right? I don't have to select Bolt. It just by default it selects 10 minutes. In terms of importance of speed, so overwhelmingly, roughly 92% people say it's important or very important for them, right? Um, so speed of delivery is important, and convenience, product variety. So all these things become important. Now, this product variety is where people like Slick have an opportunity because people value that. Can I buy everything on this platform, right? Other things was impulsive buying, right? So 46% is impulsive buying, right? So that tells you how the consumer behavior is evolving, right? So digital marketing becomes very important in that sense because that's how the impulse starts, right? And then FOMO, right? So 40% is FOMO, right? When you say a time sensitive offer, that this offer is only valid for X days or whatever, right? So, and this catchphrases, promotional notifications, very important, right? Trust in application, again, a huge factor where 80%, 82%, 83% people are saying that, right? Ability to track orders, need for, so urgent times, yes. In urgencies, people frequently buy that, more than half of that, right? Convenience of not leaving home, very important. Recommendation from home, friends, family friends. Um, Different colors, reviews and ratings, always. So 43% are saying always we check the ratings and reviews. So I think, startups should think about, what are the reviews. Comes down to how they're able to service the consumer. Uh, So again, features that promote quick commerce, so faster delivery time, better pricing. Now, better pricing again. That's why I'm saying, because you have to be price sensitive, you can only survive if you are operating at economies of scale. If you're selling a smaller sort of bucket, you may not survive here, right? So scale is important, like I'm saying again, right? AI, use of AI. 68% are saying that quick commerce has changed their shopping behavior overall, right? So again, the summary is impulse shopping, 46%, fear of missing out, promotional notifications, trust and security of the app, and ability to track orders, urgency, convenience, reviews, speed of delivery, right? And price, 64% are saying price is an important factor, right? So again, my whole point was the overall quick commerce gives us a very good case study to understand the consumer psychology, how their behavior is changing, right? So a lot of case studies will emerge. Slick is just one example. Now people will think creatively and think of other categories where they can deliver in 10 minutes, 20 minutes, 30 minutes, an hour, right? And why, like you mentioned earlier in the day, right? Myntra is planning to launch their own, other players, Reliance probably can launch their own, right? Um, so new business models will emerge. Another thing which I wanted to talk about is I was thinking about the overall uh, consumption, right? Uh, how that plays an important role in Indian economy, right? So if you look at consumption, this is data from World Bank, right? If you look at consumption as percentage of GDP, India is ranked at number 7 global. So all these economies except US are smaller than Indian economy. So the insight is after the United States, India is the second largest consumer driven economy as percentage of GDP. Okay, roughly 60% of Indian GDP is consumption, right? For US, it's around 70%. China is much lower, only 40%, right? So that's also a trend which we need to watch for as the economy goes from 4 trillion to $10 trillion economy. Consumption is going to drive Indian economy, right? We may do a deep dive later on about this data, but consumption is a major driver which is going to lift the GDP, right? So there are negatives to that as well because you are a consumption driven economy, 60% of your GDP is consumption. Any kind of demand shock pulls the GDP down, right? So there are many negatives we can probably deep dive into later on. But I just wanted to touch on these two trends. That one is the consumer psychology, which is evolving with quick commerce. Second is consumption as a major chunk of Indian GDP, probably second largest consumption driven economy after the United States. Yeah. So we'll discuss these two. Maybe we can do a separate conversation. Anything else? I think we're done for today, right?
Yes.
So thank you everyone for joining in. Please follow us for similar weekly updates. We'll be discussing uh, early growth, late stage deals in India ecosystem, and also bringing you some of the trends about the economy overall and some nuances about these individual deals. Thank you.